Hello and welcome to Talking Shit, where we talk all things health insurance. Shit, of course, is an acronym.
Yes.
Straight Health Insurance Talk. My name is Matt Allen, and with me is Aaron Miller.
How's it going, everybody?
Thanks for tuning in. And what we do here is we break down health insurance topics, and we give it to you straight. I have been in the health insurance industry for over 10 years. I've helped thousands of people, mostly entrepreneurs, small business owners, early retirees, navigate the health insurance market, specifically the individual health insurance market. And I wanted to make this podcast because so many people are still so confused. Health insurance has been around for decades, and it almost seems to be getting more confusing, and more people have more questions. It's getting more complicated, so we wanted to provide a free resource where we just cut through all the BS and we tell it to you like it is so that you can get the care that you need at a reasonable price and actually understand how the products work.
I think that's a good synopsis. Yeah, I mean, I've been in the industry for 2 years now, underneath you, and I mean, the amount of just intricacy in health insurance blows me away. I feel like I'm still hearing new things, and I don't think it's going to stop.
It is a situation where if you come into it cold, you don't have any info, and you pull on a thread, it's like two threads then get pulled. And then you're like, wait, what does that mean? Then what does that mean? Then what does that mean? And so by chunking it into these small digestible bits, I think it's going to really help if you are someone who wants to learn about health insurance and not just have somebody tell you what the right product is. If you're somebody who's kind of a DIYer, you're going to do it yourself, you're going to figure it out, this is absolutely going to be a show for you.
Not to mention if you're just choosing health insurance content for your own free time, you probably have this on your mind. So hopefully we can provide some clarity.
There's a huge market for people who want to spend their free time talking about health insurance.
Yeah, clearly we do.
Well, listening about health insurance, actually. They're not even in the... Man, you guys are wild. So what are we talking about today?
Today we're going to talk about the intricacies of the ACA subsidies. So
Okay.
This has been changing a lot, and people have no idea what's going on. Do I get them? Do I not get them? Why is it different from last year? And, how is this affecting me?
Yeah, that's a great point. A lot of people are making this a political argument too, which I just have to abstain from that situation almost in its entirety because we can't control the legislation. We just have to do the best that we can with the law the way that it is. And so I think maybe just a breakdown of what the tax credits are is probably helpful. If you have to buy your own health insurance on the Affordable Care Act Marketplace, if your income is below 400% of the federal poverty line and above the Medicaid threshold, which is typically 138% of the federal poverty line, you will receive a tax credit from the government to help you pay for that health insurance plan. That is where the term affordable got injected into the Affordable Care Act, because if your income's within that certain range, you're going to get a tax credit to help pay for it. Now, what makes this particular tax credit unique as opposed to other tax credits like earned income tax credit, child tax credit, your 529 tax credit, all of those ones you get at the end of the year. With the Affordable Care Act tax credit, you can advance that tax credit throughout the year, lowering your health insurance premiums, thus making them quote-unquote affordable. Where some people tongue-in-cheek call it the Unaffordable Care Act is when that income creeps above 400% of the federal poverty line, then you don't receive any help to pay for one of these plans. But a very common misconception that I hear from a lot of people is they then think, well, I don't qualify for one of these plans. They think if I am not getting financial assistance, I can't have an ACA plan.
Yeah. And I mean, a lot of people look at tax credits and they say, oh, well, I have one. How much is it? And they put in different incomes because when they're asking you what your income is, it's not for last year when you actually had a good idea of what you made. It's for the year in which you have the insurance. And so they're actually making you guesstimate, what am I going to make this year? And so that has people wondering, well, what if I make more? What if I make less? What even is the line? And we'll link the 2025 federal poverty line in the description below. And it depends on your household. too, which I think a lot of people don't realize. It's who is on your taxes, who are you claiming, and your household size indicates what those levels are.
Yeah. So it can seem overwhelming, this whole tax credit calculation, but like Aaron said, we'll have the charts and the tables and you can actually look at the numbers, but there are very handy calculators where you just put in, hey, my household size is 3. These are our ages, this is our zip code, this is our income, and it'll tell you what your tax credit is. It's not some calculation you need to do. The software will do it for you. But the common misconception of, hey, I'm above 400% of the federal poverty line, I can't get an ACA plan is just false. You can buy a full-priced one, you just simply don't get a discount. And so where we're seeing a lot of people have trouble in 2026 is in 2025 and years past, they qualified for a tax credit. But now this year in 2026, they don't qualify for a tax credit any longer. And they saw this huge premium increase. And I really want to break down why that was and what was unique about turning the calendar from 2025 to 2026. And this is going to take us all the way back to the pandemic, all the way back to 2021. We had the American Rescue Plan Act of 2021. During COVID, the government stepped in and they said, hey, this Affordable Care Act, this 400% federal poverty line cap, we're just going to remove that. And then we're going to give everybody who's above the Medicaid threshold, we're going to give everybody some help to pay for these plans up to a certain level that was way above 400% of the federal poverty line. And we're going to increase the percentage of the plan that we give them, of the tax credit that we give them. And so what we saw almost overnight was people who were already getting tax credits, they got a larger tax credit. And people who previously did not get a tax credit because maybe they were at 450% or 500% or 600% of the federal poverty line, they were now qualifying for an ACA tax credit after the new legislation. Then came the Inflation Reduction Act in 2022 that extended those enhanced subsidies all the way to December 31st, 2025. And so that original legislation put them into place. The secondary legislation extended it to December 31st, 2025, but they were always set to expire at that time. And so we just had a government shutdown at the end of 2025 because they were arguing over, do we extend these enhanced tax credits? Do we just leave them where they are? Do we let them expire? What are we going to do about it? And there was just sort of an impasse, and so the legislation just expired. The enhanced tax credits expired, and the original legislation of the tax credits was then what it reverted back to. And so now we are back in this paradigm of there's a hard ceiling at 400% of the federal poverty line that if you make even $1 over that, you do not qualify for a dime in a tax credit.
Which can be a lot of money. I mean, at making $1 over, we've seen in some cases a family of 4 losing, $1,000 in a tax credit. I mean, it is substantial.
Well, a compounding effect of that is these ACA plans, they can increase their premium year over year based on the amount of claims that they absorb. And so what we saw here in Indiana and across the country, but I'll just use Indiana as an example, say you had a couple, both 55, and they make, $90,000 a year. Well, on the enhanced tax credits, they're probably looking at $8,000, $9,000, maybe $1,000 a month in a tax credit to help offset their premiums. Well, $90,000 in income, that's above the 400% federal poverty line. So as we went from 2025 to 2026, they now lost that entire $800,000, $900,000 a month tax credit. So they saw that increase in their health insurance premiums. But on top of that, the base of the ACA plans in Indiana went up over 19%. So now they get a 19% rate increase plus another $800 or $900 a month because they lost the tax credit. These people, some of them were looking at a tripling of their health insurance premium.
Absolutely. And we even saw some, families of 4 and 5 who are younger, and they, finally their business took off. They weren't making hardly any money in 2025, and in 2026 they're projecting to be well over that 400% line. And a family of 4 that was paying $250 a month is now looking at well over $1,000 a month. And so people were just, blown away, not only by the lack of tax credit, but by the premiums themselves.
Yeah. And it really is going to be an issue downstream because these ACA plans, they can raise their premiums year over year. They got to file a premium rate increase with the Department of Insurance, and they have to show, hey, we lost this amount of money. They basically have to justify why they want to raise their premiums. And if it gets approved, they unilaterally raise their premiums across the board. And the people who really feel this are the ones who aren't getting a tax credit. Because if you're getting a tax credit, it is offsetting the cost of the plan based on the overall premium of the plan. So let me try to break that down. According to the Affordable Care Act, you can't pay more than 8.5% of your income in a monthly premium. And so if you are under that 400% of the federal poverty line, you're getting a tax credit. They essentially hand you a tax credit that makes the second lowest cost silver plan be 8.5% of your income. And so that's how they dictate what your tax credit is. Now, you don't have to buy that silver plan with that tax credit. You can go take it to a bronze plan. You could go take it to a gold plan. You could do whatever you want as long as you're buying an ACA plan with it, but that's how they calculate it. So when the premium costs go up and that second lowest cost silver plan goes up, the people who are getting a tax credit, they don't really feel those premium increases because their tax credit increases with it. The people who are really feeling those premium increases are the ones who lost their tax credit going into 2026 and the ones who have never had one to begin with. And we are seeing a lot of entrepreneurs, families, these self-employed people who make good money, they're growing their business, and they are being punished by these ACA premiums continuing to go up and continuing to go up.
I mean, it's a lot to handle, and we're trying to break it into a 25-minute segment. But in your mind, where does it go from here? Like, are people, I feel like we talk to people who think it went away altogether. Like, there's no tax credits left. There's people who are still asking us, are they going to come back? I mean, it's hard for us to tell because we're not actually making the legislation. But where do you think it goes from here?
Where I think it goes from here, well, there's a couple things about that, and I want to touch on that first point that you said, that some people think the tax credits went away altogether. So due to some media fear-mongering and some political maligning across the aisle, a lot of people thought, well, they're just taking away the tax credits altogether. That's just not true. If you make under 400% of the federal poverty line and you're above the Medicaid threshold, you still get a tax credit, just like you did day one of the ACA, just like you did when there were enhanced tax credits, and just like you do right now. You still get a tax credit. So those are still available. I'm getting emails from these people who've planned their early retirement based on getting a tax credit, and they're all like, oh my God, what are we going to do now? Do I have to just work till 65 because the tax credits are gone? And I say, no, you were projecting a retirement income of $50,000 between you and your husband. You organized your distributions appropriately. You're still going to get a huge tax credit based on that. And it's all this fear mongering. So the tax credits did not go away. The enhanced tax credits went away. That's what we need to keep in mind. And so if you can get your income under that 400% federal poverty line, you can still get an enormous tax credit. Now, as far as future projecting what's going to happen, I honestly believe people on both sides of the aisle are benefiting from these tax credits. Mm-hmm. People on both sides of the aisle, they use the Affordable Care Act, or, if you want to use the pejorative term, Obamacare. Everybody's using it. Red, blue, independent, doesn't matter. So I think it would be political suicide to eliminate the tax credits altogether. I think they will stay as they are, because those enhanced tax credits were really in a response to the pandemic. It was to a health crisis. That's why they put it into place. Health crisis is over, so the enhanced credits are over. And so to future project, do I think the enhanced credits will come back? Not how they were in COVID. If there's any sort of enhancement, it'll be a modest increase in them, because what you're seeing happening is the people who are feeling the brunt of these premium increases are the ones not getting the tax credit. And so what we're seeing with the risk pool of the Affordable Care Act plans are the people who need to be on it are going to end up being the only people who are on it. Mm-hmm. Because if I'm healthy and I make good money and I'm getting beat over the head with a 20% premium increase year over year and the government's not helping me out with any sort of tax credit to pay for it, I'm getting the hell out of Dodge. I'm not going to be on that plan anymore. So now you're getting the healthy, successful people out of the risk pool. The only people who are staying are going to be the ones who are driving up claims, who can't qualify for any other type of health insurance, and who are getting huge credits from the government to pay for it. Those are going to be the only people who are left. So then you're going to see insurance companies continue to raise rates. Mm-hmm. Their tax credit is going to continue to raise because, again, that silver plan can't be more than 8.5% of their income. So who is going to end up paying for all of these Obamacare plans? When we get to the very end, it's the taxpayer.
Yeah. Yeah. And I think one thing that people get mixed up with, I mean, this was only my second open enrollment, but when it comes to projecting your income, and let's say your income changes or you thought you're going to be over that minimum threshold of 138%, but you're unsure, people are wondering what happens when they guess wrong on their projected income.
Yeah, thank you for reeling me back in. I was getting a little hot about that.
Talk some shit.
Yeah. Well, I like to see where things are going, and I love the Affordable Care Act. I've got hundreds of clients on it. I think it's a very useful tool for the right people in the right situation. So please don't think I'm maligning that. A lot of people are getting the care that they need. But more to your point, the majority of people who are on these plans are also, they're self-employed, because if you're employed, you typically have coverage through a job and you don't need to use the Affordable Care Act. And so to your point, a lot of these people are self-employed and they have to project what their income is going to be that year. They can't use last year's tax return. It's not a reliable source, because if I am going into 2026 and last year I made 30 grand, but this year I think I'm going to make 60, that totally alters what my health insurance is going to cost. Or for a family of four, say I make 120 grand this year, well, that's going to get me a tax credit. But if I make 150 grand the year after, my tax credit's gone. And so to your point, what could potentially happen if you guess wrong? Well, let's say we are a family of four. The 400% federal poverty line for a family of four is about 128,600, I think. Mm-hmm. It's right around there.
Yeah.
So if I project going into 2026, say I'm a real estate agent, say, hey, I think I'm going to make 120 grand this year. I feel pretty good about my business. That's a good number. Well, you might get several $100s in a tax credit to help offset the cost of the health insurance. You get your family of four on there. You make sure the pediatrician takes it. Great. Now you're cruising along and the housing market just heats up and you start selling more houses than you thought. Maybe you have a rental property, you sell that, so you got some capital gains on that. I don't know how it works. But let's say at the end of the year, your income is actually 150. Well, now when you file your taxes, they're going to say, oh, your household income was 150. You put on your health insurance application that was 120. Remember that tax credit that we gave you, that $450 a month? Actually, we're going to need that back because you weren't supposed to have that in the first place. Because if they had put 150 on their application, the application would have told them, hey, you don't qualify for a tax credit. So it's not illegal to get $450 discount.
Sure.
There's no fines. There's no penalty. It's not interest. It's not, you're not levied or have a lien on something to pay it back. You just got to pay it back. It's a unearned tax credit. You should have never gotten it to begin with. And so you would then owe $450 times, you'd owe $5,400 back at the end of the year in that scenario. But you also made 30 grand more. So like, I get that it sucks to get that tax bill at the end of the year, but I'm all for people making as much money as they possibly can. But the ACA in its current structure with the tax credits kind of penalizes people the better they do.
Yeah. And I talked to a couple during open enrollment. They were retired and they had a good feel of what they were going to pull in this year. And I told them what the limit was for a household size of 2. And they told me, oh, we're going to make $50 less than that.
Oh.
And I had to reiterate 7, 8, 9 times, because if they go $50, $51 over what they're expecting to make, I mean, this is two 62-year-olds. Like, it was going to be
They're probably getting like $1,400 a month in a tax credit or something.
So, I mean, you do that math. That's
like 17 grand. If they're $51 over,
yeah.
If that guy wins a scratcher, they're screwed.
I know.
Woo.
I mean, so that's where some people have to be more careful than others when it comes to the income they expect to, I guess, get in the year in which they have the insurance, right?
Man, it's making me sweat.
I know.
Tightrope act. We're going to need a status update on them when they file their taxes for 26.
We definitely do.
See if they did it right. That's wild. I've never heard somebody cutting it that close.
I mean, they were adamant that they were going to be exactly that number.
I mean, I guess if you're on a fixed income, you can do that.
Don't win a scratcher.
Don't win a scratch. Don't even play the scratcher.
Yeah. So I guess in this whole conversation of tax credits and who the Affordable Care Act is for, I mean, what do we see as the takeaway that we want people to have from this?
The takeaway. Well, I want them to understand how they work.
Yeah.
I want them to understand who it's for, how it's calculated. You don't need an in-depth idea of how it's calculated. You just look at the chart. Hey, is our income going to be below 400% of the federal poverty line? Okay, then we're going to get assistance to help pay for one of those plans. If it's above, well, now you're going to pay full price.
Right.
And one of the greatest things about the Affordable Care Act, outside of the ability to qualify for tax credits and get a lower cost, is the Affordable Care Act is going to cover pre-existing conditions right away day one. That's one thing that other insurance plans, other options outside of the ACA, they just won't do. They'll either never cover that pre-existing or they'll slap a 12-month wait on it.
Yep.
And now for certain people, that's not really a big deal. All right, I don't have any pre-existing. Sign me up. But for other people, they've got an $800 a month medication. They've got some chronic condition. They're 6 months pregnant. They need a new kidney. I don't know. Pick a pre-existing.
We've seen all of them.
We've seen them all. They need to be on an Affordable Care Act plan. Now, whether or not they get assistance to pay for it, that's going to be determined strictly by their income. So if you need to buy your own health insurance and you are able to project what your income is going to be for the year you have the insurance, you can use a very easy chart to just see. We'll tag it below. Hey, I'm going to qualify for some assistance. Well, then the ACA is right for you. If you don't qualify for assistance and you don't have a chronic pre-existing condition, there are options. There are more affordable options, because if you're paying full price and you're healthy and you are on the ACA, you're on the wrong health insurance.
Yeah. I think that's the part that people don't see, right? If you have to get health insurance on your own, talk to your financial advisor, talk to your buddy. They're probably going to point you towards the ACA, right? I mean, it's the only thing people...
Just Google health insurance.
Yeah, and then type your phone number into the first link that pops up. You're going to get great assistance. They're going to really hold your hand, pepper you. There might be 15 or 16 people that reach out a day.
From all over the country.
Yeah. When I first got into the industry, I was like, I'm going to see what other people are doing to market and how their customer experience is. And so I put my phone number into, I hate to say it, I think 2 or 3 of those sites. And 2 years later, I'm getting calls and texts still. I mean, it is ripe with leads. Everyone loves their leads. So don't do that. Find a reliable source and, make sure that they have options to essentially give you. If it's ACA only, you might want to have, another talk. But again, if you're getting those tax credits, there's no better place.
No better place. Always going to recommend the ACA if you get a tax credit, because that's where you're supposed to be.
Yep. Very nice. Any other shit talk you wanna bring in?
I don't think so. This one can be a little politically charged. People get a little fired up when they're talking about the ACA, as do I. So I don't want to ruffle any feathers.
Sure.
We help everybody.
Well, we help them learn.
We help them learn. That's true.
Yeah. Very nice. This has been the first episode of Talking Shit.
I thought we weren't pointing out.
Oh, well, this has been an episode of Talking Shit. It does happen to be the first episode, but...
Say it again.
This has been an episode of Talking Shit, where we talk straight health insurance topics.
1,